Welcome to Sustainability Soundbites, presented by E&E Leader. Amazon boosts Louisiana data center bet to $18 billion. Amazon is adding a third data center campus in northwest Louisiana, raising its planned regional investment from $12 billion to $18 billion, even as questions raised earlier this year about the state's cost allocation rules for large loads remain unresolved. Amazon said this week it is increasing its planned investment in northwest Louisiana to $18 billion, expanding its data center campuses across Caddo and Bossier parishes with a third planned site in Shreveport. The move builds on the $12 billion commitment Amazon announced in February and, when fully built out, is expected to create up to 750 full-time data center jobs and support roughly 2,500 additional positions in the broader community. Stack Infrastructure is developing and owning all three campuses and expects them to support up to 2,250 construction jobs. Amazon says it is covering its own grid costs. Southwestern Electric Power Company, or SWEPCO, continues receiving full-cost funding from Amazon for the new energy infrastructure and grid upgrades needed to serve its data centers, alongside up to $400 million in public water infrastructure upgrades the company says will not be billed to residents. SWEPCO President and Chief Operating Officer Brett Madison said the utility's commitment remains the same. Growth should pay for growth. The company has also brought roughly 200 megawatts of new solar capacity onto the Louisiana grid, and its data centers use water for cooling less than 13% of the year in the region, relying on air cooling once temperatures fall below roughly 85 degrees Fahrenheit. The cost allocation question predates this announcement. Those commitments arrive against a backdrop of unresolved concern about how Louisiana actually allocates data center infrastructure costs. The rule predates this week's announcement. A May 2026 report from the Alliance for Affordable Energy, produced with the Sierra Club's Delta chapter and Empower LLC, examined 5 hyperscale projects in the state, including Amazon's 3 Northwest Louisiana campuses, and pointed to a December 2025 Louisiana Public Service Commission rule that allows data center developers to pay only half of certain new power infrastructure costs, with the remainder potentially recoverable from other ratepayers. That finding does not contradict Amazon's specific pledge to cover its own project costs, and the company has consistently said it will fund its own infrastructure in full. It does mean the state's underlying rule structure, which governs how those costs are ultimately allocated and who bears the risk if a project's demand forecast changes, remains a separate and still open question from any individual company's voluntary commitments, a distinction regional advocates have pressed regulators to address directly rather than leave to case-by-case developer pledges. The scale of the surrounding build-out adds to that context. Data center leases and related infrastructure commitments increasingly function like long-term debt on hyperscalers' books, and off-balance sheet financing tied to other Louisiana projects has already drawn state-level scrutiny over ratepayer exposure, even where the individual company involved is not Amazon. For utilities and regulators, managing the gap between a developer's public commitments and the contract terms that actually bind them, that gap is becoming as important as the headline dollar figure, since large load tariffs increasingly carry collateral requirements and exit penalties that function like long-term financial obligations rather than a simple rate schedule. Amazon's Louisiana investment has grown 50% in 6 months. Whether the state's cost allocation framework evolves at a similar pace is the part of the story still being written. Interested in a soundbite sponsorship? Check out the energy category, currently sponsored by Amazon. Reach out to our team for more information. Thank you for listening.